Julia, the Australian share market, not really the best way to start the new week.
Richard, it wasn't a good start for the Australian share market, and I guess there's a bit of jitters around given that the US session has now seen a decline for 3 consecutive sessions. And if we have a look at the Dow futures, they're pointing down 0.4%, so pointing to a weaker session tonight in the US. Now, if we have a look at where most of the damage came from, it was the energy as well as the material sector. We saw Rio Tinto down by 2.2%, Fortescue down by 2.5%, and all eyes really on this company because it's got a Wednesday deadline to secure about $6 billion worth of funding. Now, back in mid-August, this company came out to say that it had signed a deal with Bayo Steel to provide Bayo Steel with its second half iron ore needs at a 35% discount, but the deal was dependent on Fortescue securing the funding by the end of September, which of course is on Wednesday. So this stock is expected to be in the limelight this week. Also, if we have a look at some of the poor performers, Guns lost almost 10% in value today. That came after the announcement late Friday that Guns had missed out on the bid for some of Timbercorp's assets. And of course, the market reacted to that today. We did see ANZ having a good day, though, up by 2.3% on the back of broker upgrades from its announcement on Friday and its acquisition. David Jones also bucking the trend, up by 1.8%, but all eyes now on that Myer IPO. It should debut on the market in November, making it the biggest IPO of 2009. But altogether, not a good start for the week for the Australian share market. Really, the energy and material stocks dragging the Australian market lower.
Julia, speaking of not a good start to the week, last week we heard from Karoon Gas having a few problems with its Kentucky 1 well, and it's got, it seems like necessarily another problem, but not so much a good news.
It wasn't good news for Karoon Gas. I guess shareholders were already anticipating that Kentucky 1 would be a write-off, but that was only confirmed this morning when Karoon Gas came out to say that the well would be plugged and abandoned. Shareholders probably were hoping for much better results given the track record that it's seen in Poseidon 1. So in the last week, if we have a look at Karoon Gas's share price, it's dropped more than 30% in value. If I bring up Karoon Gas's share price, this is in the past month. This is what it looks like, and you can see from Thursday all the way through today till today we saw an acceleration in those losses. So today the share's not doing very well at all, down by 7.8%. Shareholders would now be pinning their hopes on Poseidon 2, which of course is their third joint venture well with joint venture partner ConocoPhillips.
Okay, and on the other end of the scale, Nufarm shares surging.
Nufarm shares did very well today. That's despite saying that their net profit for the year to 31st of July had fallen 42%. Now, the main reason for that fall was a fall that we've seen in fertiliser prices, which led to around about a $40 million write-down to inventory. They also had significant restructuring costs associated with Europe and some of the changes that they saw there. But the reason why Nufarm shares have soared was a conditional offer coming through from Sinochem at $13 per share. Now, the offer is subject to 5 weeks' worth of due diligence, and there are a number of risks associated with the offer. If we have a look at Nufarm shares, this is Nufarm shares in the last 30 days, and if we have a look, we've seen that big jump in its share price today. Its shares jumping around about 7% today, but I guess there are still significant risks. They still have regulatory risks to get past, also shareholder approval, not to mention the 5 weeks' worth of due diligence as well.
Okay, Julia, appreciate that. We'll talk to you soon.
Thanks, Richard.